Jamie, is the downturn in inflation sustainable, or is this an idiosyncratic month?
Well, I think the big picture is that inflation is coming down in the UK, and that's as the effect of sterling's depreciation begins to feed through and pass away out of the inflation measure. But this month in particular, there is some idiosyncratic stuff happening. The weather's been absolutely dreadful in March, and all the shops are full of the wrong clothes. So this has led to some discounting which otherwise wouldn't have happened. So my guess is that you'll see a bit of a rebound next month. And actually you see that in the European data more broadly as well. You see it in the Eurozone too.
So what's interesting is how quickly the market re-rated the BOE rate hikes expectations. If you come inside the Bloomberg, this is WIRP, W-I-R-P, GO, and it shows the end rate for 2018. The yellow line is just one more 25 basis point hike, and the purple line would imply two, with a rate of about 1%. And you can see the divergence after they had moved in tandem for a few months. Is that the correct response?
I think it's actually an overblown response to 1 month's data. So my feeling is that the Bank of England is looking at the unemployment data most, and then it's looking at wages. The inflation stuff's bouncing around. There's a lot of uncertainty about the influence of sterling. And so if you want to predict when rates are going to go up, you need to look at the labour market.
So every month we spend a fair amount of time listening to what Mr. Carney thinks about what's going to happen with inflation. How do these numbers square with what the Bank of England was projecting, and specifically going to the wages you mentioned?
Well, again, so the inflation data is a little lower than expected. The bank had 2.8% in their forecast. I think it came in at 2.5. So we are a little bit lower, but again, for reasons which I think are likely to be temporary to some extent. On the wages side, there's not much going on wages. It's picked up a little bit, but there's not an enormous amount of progress. Really, what we're worried about, or what the Bank of England's worried about, is that unemployment is so low by historical comparison that it's hard to imagine there won't be price pressure around the corner.